All right, go ahead. Go ahead. Welcome to
All right, sir.
this is a personal call. So go ahead.
All right, sir. I want us to treat liquidity, then that aspect of the week that leads to market breaking market structure, which gives us an entry. I need to get those aspects very clear. Then the that range high, range low,
Okay.
and coming to then the settings. The settings for that are 50% something that we're using.
Down to all right.
That too, yes.
Okay.
But I was just intending to private chat you for the settings of those for that too.
We'll just it's not really a
Then
setting. The setting is there. It's just to uncheck
okay,
some of the things that we don't need.
okay.
Go ahead.
Then working on the like I usually see this this other man and the group dealing with lower time frames. I think uh, the much of the entry now aspect I want you to take me through is that lower time frame entry because
Okay.
of the size of my account. I,
All right.
I needed to then what I call it this other block, the ones that the, getting to know the ones that are that has a stronger is it reliability now should said or what?
Okay.
Yes, sir.
All right. Funny enough, some of these questions you're asking, we already
Yes,
have
sir.
the videos in the library, the mentorship library. But since you are new, I'll just touch on them, but those materials are already there. You can just ask me to point you to it.
Okay.
Okay. So let me
Yes, sir.
start from let's just treat the GAN tool.
Okay. The gang too.
The
Okay.
tool, if you come to just come to this left side. I guess you can see my screen, right?
Yes, sir. Yes, sir.
Okay, so if you come to this left side, you will see GAN tool. I think where you have your Fibonacci. Yeah, you see a GAN tool. Yeah.
Yes, sir.
Okay. Then if you have seen the GAN tool, let me just draw it out. You know where it is
Okay.
already. So just pick it. If you pick it, come to the setting. This is the setting. Like this, any tool you pick on this place, this is the setting. Click on the setting. If you click on it,
Okay.
adjust it to this corner and remove everything. All these ones will be there in your own. All these ones will be checked. This is how your own will look like. Okay. If you have never edited it, all these lines will be there. It will be something like this. Is that correct?
Yes, sir.
So just uncheck, remove the check, this check, remove them. The good in the box, uncheck them. Right? Just uncheck all of them. Uncheck all of them. Uncheck all of them. So just uncheck them, uncheck them, check them. Background remains. Then I think my zero is there. I'll check this. I'm leaving 0, 1, and only 5. That's it. 0, 1, and only 5. That's what I'm leaving. Yeah, I think this I
0.
made my own. 0, 0 0.5, and 1. See, 0, 1, 0 0.5. That's all I left. So you can now change the color. My 0 0.5, because it is black, you can bring it to this color and this color. You can just now play with it. You will see the color, whichever one you prefer to use. Then my one, I put it on red. That's this red line below here. I can still make it black if I want to. I can make it any other color. You know, just play with it. You see a cleaner color that will be fine for you. I think I do prefer this. I prefer something like this. So when you are done, just okay. That's how to set the GAN to. That's how to set the GAN to. Is that okay?
Yes, sir.
So we are done that. Let's talk about ranges. First, I said the structure. Okay, structure. I'm trying to make this. There are components that we use in trading. I've said this in some of the other videos. One, we have structure. Structure talks about the overall trend of the market. Then the next is your range, or we call it trading range. And that's why you're having questions. There's a video on that trading range. I'll just explain. After trading range, the next is liquidity. After liquidity, we talk of banks. By banks, I mean order block, OB, institutional candle, fair value gap or IPA, and mitigation candle, smart money cube, every other grammar they use. We talk about the banks. After the banks, you now draw your fib levels. You use fib levels for extra confirmation. Fib levels, talking about discounts and premiums. So we buy at discount. Anything below 50% we buy. Then if it's above premium, I think I'm correct. Discount and premium. So above 50%, that is where we want to start looking for sell opportunity. So this is our checklist. Any day, anytime. This is our checklist. So using this checklist, let me now explain something. If the trend is a sell trend, this is a sell trend. Price was selling down and price pushed up and gave you something like this. This is a sell trend. It's a bearish momentum. Okay. So by structure, you know that we are bearish. The next thing to do is to identify your trading range. By trading range, we mean the last low and the last high. This is the last high. That's trading range. So when price was here, when price was coming here, this was your trading range. When price was retracing. But it was this move that established it. So this becomes your last high. And now, assuming price is now retracing. Once price starts retracing, that's when you can identify that this is a low. Because you don't know how far the low will want to go.
The low will go.
Yes, so once price starts retracing, that's when you identify your high and low. So this is your top range. Most times I don't write all these things again, but this is how we started. Top range and then down range. Yes. What it means is that any day price break above here, I will not be looking for sell opportunities again. That's what it means. Because this is the top range. Since we are bearish, we know this lower high is where we are going to be looking to sell. Now, how do I get this zone? I'll still explain. We are going to look to sell at this lower high. So if price should, let's say I get in here and price break, and when price finish breaking, I see price coming down, I will not jump into sell because price has violated my trading range. I don't want to sell again. Rather, I'll be looking to buy. Because I know that since price has broken, what do you now call this? A break of structure. Then I know price will come back here. I'm now more interested in buying than trying to sell again because price has broken. But when price has not broken, this is my trading range. I know that price come here, I want to look for a lower time frame entry. You mentioned lower time frame. If price
Yes, sir.
now come here, I want to look for the same formation. What's the formation? Price should give us something like this. Price should break, structure, retest, and then we can go down. This is the formation I must look for. Price, we have to clear some highs, which is like a liquidity sweep. Price, we have to take liquidity, clear some highs. It must be obvious. When
Now,
price clears some
this
high, I'm coming. When price
okay.
clears some high, the next thing I'll be waiting for is for this break. Let price come and give me this break of structure. Then once price breaks structure, I'll be looking to get in at this zone to now sell down because I really want to sell here. That's trading range.
Okay.
Okay, that's trading range. Now, where is your liquidity? Your liquidity is always within this place. Remember, I already spoke of something now. This is the last retracement before this expansion. This was the last
Yes,
buy before this push. So all of this is 50%. So I'll just mark my 50%. This is where I'm expecting price. Anything around this 50%. So liquidity will always be around here. There will be some week around this zone. Maybe when price was selling before, price gave something like this, gave something like this, gave something like this, and then price sold down. This week now is a liquidity, internal liquidity that I'm expecting price will come and clear. But if this is a daily zone, I'm not just going to get in on the week. I want price to clear the week and give me this deformation I'll be interested in on 1 hour. It is a daily zone.
Okay.
Right? If it's a daily zone, I want that 1 hour break of structure. Let me show you something on VIX 50. All right, 75 is still coming. I think limit is there already. Let me show you something on. You see, okay, jump 50. Yeah, jump 50. Let me show you. You know how we trade. The first thing is your daily. Oh, Jesus. Tell me, please pick this call. Tell me I'll call. I'll call. Or if it's a message, my mom, let her drop the message. All right. Hello. So this is daily on jump 50. I just want to use that to explain structure, trading range, liquidity. I've not talked about bank because bank is always within this 50%.
Okay.
Within this 50%, there will be an order block or an institutional candle or a fair value gap or an IPA. Within this 50, but you must measure this 50% and box the whole 50%. So let's go to jump 50. Structure, trading range, liquidity. This is jump 50. And we have to push my screen together. So what is it? Price has been bullish. Is that correct?
Yes, sir.
It's very clear. Look at it. When price was bullish, all right, let me also use, we know price is bullish. Look at trading range. This was a high. This was a high. And this was a low.
Yes, sir.
Immediately price broke this high, this low becomes your trading range. As price is retracing, this is no longer the range, this is now the new range.
Yes, sir.
Is that okay? So if price should close below this low, assuming price close below this low, I will not want to buy again. I want to sell because this is not a break of structure to the downside. I want to now buy and sell around this place. This is what I will not be looking at. Is that okay? But price has not come here. Price is retracing. The next thing I'll do, structurally, I know we are bullish. Here's my trading range. This is the last low that was created before this high was created. That's my trading range. Next thing I will do is to bring out my Gantt tool. I want 50% of this push down. That's 50%. So I will box 50% here. I will box it. That's my 50%. That's why if I can delete this now. This is what I'm waiting for. I know price must have to come here.
Okay.
Thank you. God bless you. Right, so I know price will come here. Now, Here am I going to be looking at? I want a break of structure around this place. I want a break of structure around this zone on 1 hour. Okay? I won't go to the 1 hour.
Yes, sir.
But 1 hour, just come and wait for price to come. Then look at what I told you, the week. That week. This was the last week. These were the weeks created. You can see how price created these weeks.
Yes, sir.
Okay? This is purely liquidity. You see, double bottom. That was liquidity. Price came. What did price do? Price first of all traded down, created the wick, pushed up, boom, activated it. But I'm not going to come and set my entry here because possibly
Okay.
the stop loss will be very large. Very large. It's going to be very large. I wouldn't do that. I'll allow 1 hour price to come here. 1 hour, I'll just switch to 1 hour and be waiting for what price will do on the 1 hour. How I wish you can get to 1 hour. Let me see. Let's try. It's a long time. All right, let's try. Maybe we can get a 1 hour. Let's try. If we can get 1 hour, that would be beautiful. That would be beautiful. We can get a 1 hour. All right, beautiful, beautiful, beautiful. Let's allow it to go. Beautiful, beautiful. Network cannot load that. It's a long time. Can't load that. Oh, let's see 2 hours. I would really prefer the 1 hour. Let's see 2 hours. I'll get it 2 hours to be beautiful. Okay, 2 hours loaded. Fine. Let's use 2 hours. But I do prefer 1 hour for a daily point of interest. So I'm going to lock this in. Let's see. All right. This was all the zone. This is all the zone. Okay. The price is coming back gradually. As price is coming, price created all of these weeks, all of these weeks, all of these weeks. And then if I zoom here and I take my Fibonacci, this Fibonacci from here to the recent high before retracement was coming, what can you find? Price came to 78.6 here, bought a bit, came and swept it. So I know now that structurally we are bearish. My trading range, I've identified it, and I'm waiting for price here. What's the next thing? Liquidity. Forms of double top, wicks, and all of that. Look at the wicks were clearly identified. Look at the wicks. Were clearly identified. This one was clearly identified too. So it was within it. If you had bought here, fine. But price is still within that zone. Price has not gone out. So this is liquidity. This is a form of double bottom. You can see it clearly show liquidity. Now the next thing is this. Banks. What is your bank? Other block, institutional candle, fair value gap. So within this place that is highlighted, within this 50% region, there is an order block.
Yes, sir.
Now, if I don't know the other block is simply this last candle that cleared everybody and led to a break of structure. That's the other block. So let me try to zoom out. See? See, this was where that massive sale happened and price broke all of this low. So this other block came and cleared everybody all these weeks here. Price sold down, cleared everybody here. Right? So that is the other block. If you can identify it, it will be beautiful. So if I identify it now, I can bring my screen, sorry, my 50% down to the other block. This is the other block. It started from here. This consecutive sell candle started from here. And that's the other block. And within this other block, you will see either an institutional candle or fair value gap. Can you see a fair value gap?
Yes, sir.
That's a fair value gap. So I will now,
Second candle.
yes, I will now outline all the fair value gaps. Any fair value gap I see there, I'll pull them out. That's a fair value gap. It's identified. This is another fair value gap. Identified. So I'm waiting at this fair value gap. Let's see where price came into. So were you correct? You were. Within this other block, there's a fair value gap. So I'll line the two, wait for price. Price came into the fair value gap and tapped it beautifully. Now that price has come to this place, tap the fair value gap, what are you going to do? Wait for another break of structure here. That takes us to the lower time frame entry. Wait for another break of structure here. So I will zoom out. Price has tapped in. Now I want, remember we're still within this whole zone. So I will be waiting these 2 hours. I'm waiting for price. I can remove this now. Let me remove this. I want price to come and break structure, lower time frame entry. When price was coming to this fair value gap, what can you find? A high. This was a low. This was a high. This was a low. This was a high. This was a low. This was a high. This was a low. And price broke structure. That's a break of structure there. Can you see it? Is it clear enough?
Yes, sir.
All right. So if it is clear, price gave you a break of structure. That was a break of structure. Let me zoom it out very, very well. So that you see, look at this candle push down and price closed up also. This is your break of structure. It's your break of structure. Price has broken structure in this candle. Now, when price broke this structure, price came back for this week. Possibly you wouldn't have gotten this. Now, price created all of these weeks as price broke structure, all of these weeks. You see how that price came back to clear all of them. Look at the weeks. You see, after this week's created, price broke structure, price struggled and struggled, mitigated this cube that was here, and price can clear them. That would have been your entry. When you see price at one zone, it is liquidity. Price was building it. People want to buy, price will come, weak them out. Look at somebody was buying on this week, this price came, wicked it out. Somebody was here, price came, pushed up. More people started buying. That's why this candle was formed. What did this candle do? Came, weak out this one, weak out these people that were buying. Candle sold. The price bought up a bit. People jumped in. Our price is buying. What did this candle do? Came, weak out everybody around the zone. And that was the entry. Your lower time frame entry would have been this week's. I would have just played all of these weeks. Then stop loss here. That's a 367 pips. Now that's less than $1 on the lowest lot, less than $1. Then you want to start looking at taking price first to this high on the left. That was your range. This is your range. That range becomes your external liquidity for your target. That's it. That was your target. Did price hit your target? Yes, sir. Price did. Did it hit it immediately? No, sir. But did it hit it eventually? Yes, sir. Yes, sir. Price did. So that was a 1 to 14. Now price has mitigated this and closed that above. Where is your new trading range? This becomes your new trading range. So this is now my new trading range. This low, that week is my new trading range. And then this high is my new trading range. The recent high before price started retracing. Yes. So what am I going to do now? This was the push down that led to this push up. So the same thing. I'll take 50% of all of this move. That's what I'm looking at. That's 50% of it. That's where I want price to come back in. So where did price come into? Price came back into that 50%. Did you see it? Is it clear enough?
Yes, sir.
All right, so price came back into that 50%. And when price came here, if I want to zoom out, I'm going to zoom out so that you see it. Let me send this to back first. All right, price came back into that place. Let's zoom out. Let's see when price came here. If we got a break of structure to the upside, let's see. Let's see. This is when price came back into it. I will zoom out, then I will allow you to tell me what happened. All right, what can you find? Tell me what you can see. 10 minutes, Jesus. All right, price gave this high, price gave this low, price gave this high, Price gave this low, price broke structure.
And there's a break of structure.
That's correct, Abi. So when price broke structure, this was the break of structure. What are you going to be looking at? Next thing, now I want to look at the liquidity banks and all that. Price has broken this structure. So all of this move, remember, either you take 50% of all of this move for the break of structure. You see, that was where you were triggered. Is that correct? That would have been an entry for you.
Yes.
This would have been your entry. Stop loss at the lows. And if I see that, I told you that there's always another block or fair value gap. If you check here, there was an IPA, there was a fair value gap when this candle broke. That was the fair value gap. Price came to close. Price closed it. Pushed up a bit as if they want to continue. They came, pushed out everybody. But if your stop loss was here, you'll still be on this trade. That was the entry. Sweet. And then here you're targeting your top range, which is now here. The price get there? Yes, sir. Did it get there easily? No, sir.
No.
But did it get there eventually? Yes, sir. It did. That was it. So when price broke this high, here's your new trading range. This high and the last low. That's the high. This is your new trading range, the last low. So this is your last low. So the same thing. Let me remove this. Okay, no, let me not remove it. 50% of this. 50% of this move, all of this move. That's why you want to wait for price to return back. So this is the 50%. 50%. Price will come here. It only take time. So I'm just trying to rush. All right, price came back into it. True of us. Price came back into it. That was it. When price came back into it. Price came back into it beautifully. Now, would you have gotten a lower time frame entry? We go to 1 hour. 1 hour, price came here. There was a form of break of structure. You may not see this one. You may not, but this was a break of structure. You may not see this. Let's say you go to 15 minutes, you see this. Okay? 15 minutes, you see a clear break of structure here. Then you play either 50% of everything, or you play this last candle, or you play all these things created, these weeks created before the break. This was where price broke here. So these weeks created would have been your entry. So this would have been your entry. If price weak you out, the answer is no. Price only came low. Like, oh, I'm going to kick you out. The price does not kick you out. Here's your next target. This place. Did price get there? Yes, sir. Did it get there very fast? I can't tell. But price got there eventually. That's what matters. So now price has broken this. This is your low. Price has broken structure. This becomes your next high, and this becomes your low. Did price come to 50%? No. Look at it. This is 50% of this. Did price come there? No. This didn't come. So price didn't come. Price didn't give you this entry. You waited and price left. Fine. We have gotten like about 2 or 3 entries already. Oh, Jesus. Price came back. La, la, la. Wow. See? I just wanted
Came
to
back
conclude.
after some days.
Yes, but it came. I just wanted to conclude. Price didn't come back. But price broke, price came back. La, la, la. Wow. I didn't see this. All right, but I've considered, okay, now price is here. Price came back. This is still a structural point. And price, you got entry from here on the lower time frame. This is your target. Did price touch the target? Yes, sir. So if you have gotten, let's say, an entry around here, then stop loss here, all of this push. Mad. That's cool. Price gave you a 1 to 6 before price retraced back. So let's go back to 4 hours, because I saw a break of structure that I wanted to show us. For these 5 minutes remaining on this call, I don't like using Zoom again. But Telegram will just give you endless Oh, but so we give you limited just 30 minutes. I don't want to subscribe again since I can use Telegram for my calls. So subscribe. We do 4 hours on the call. What's happening to daily? Okay, daily is not loading. Let's see. All right, 4 hours. 4 hours. What can you find in 4 hours? Price rallied or price broke structure. Is that correct?
Yes, sir.
Now, price there was a sweet break of structure. So we're supposed to be playing all of this zone. There's IPA here that ought to be played. Price didn't come back to it. Ah, but I prefer the daily. Okay, all right. Good. Daily has given us that break of, okay. That was even not the break of structure. This was the main break of structure. This is the daily break of structure. Yeah, I know. So I can remove this now. This was the daily break of structure. Okay. High, low, price broke all of the structure up and broke here. So what are you expecting? Two things. Either you take 50% of all of this, when we play it, or you look for the other block, this 50%. Price will come here. Price came to 50% of it.
And
So,
we mark the 50%.
Sorry?
I said, well, then mark the 50%.
Yeah, that's what I just did. So that's 50%. You're expecting price to come here. Now, this 50% region, what are you saying? There was an IPA here. But I'm not really concerned about this. I want 1 hour to come back here. Now, price went here 1 hour. Price gave an entry here, I'm sure. 1 hour. Let's see. 2 minutes. Jesus. Okay. All right, let's see 1 hour. If we can still get something here. Okay, this 1 hour. Okay. When price came there 1 hour, what can you find? The construction. Is that correct?
Yes, sir.
So break of structure
The downside.
to the downside. So either you play 50% of all of this move. That was your entry, 50%. You see it? Price tap 50% of the move. So even if you didn't want to play 50%, let's still highlight this side, right? 50% can just take your entry straight on that 50%. Sell entry 50%. That's giving you a 9 or let's say 1,000 pips. You don't want to do that. Now, price came there. What can you find in that 50% zone? You can clearly find an IPA. Can you see it? See, this is an IPA. So mark out the IPA. All the IPAs you can find. All the IPAs you can find. Just mark them out and wait for price. Just the way we mark all the IPAs there. And wait for price. So price came, tapped here. That was the entry. This was the entry. Like that was the entry. Oh, 50% of the IPA and price left. Let's imagine where we are currently. So where we are, I don't know how many pips, I don't know. Where we are, let's say by 1 to 11. Did price get there? Yes. Does it take time? Yeah. Our price is still coming here because this was where price broke structure. Price is coming here. So now, looking at daily, this is another entry zone for daily. I wish I could finish this thing before my time goes on. 30 seconds remaining. It is daily. All right, it's daily. Now on daily, let me remove this. There is still an IPA above here. The price may want to come to. I don't know when. I don't know. Price will want to come here. But if I look at my current range, this was top range. This was down range. We expected price to come here. Price didn't come here. Price gave me another range, top range,